Let's talk more about today's deep sell-off and bring in Mandy Zhu, the chief equity strategist, derivative strategist at Credit Suisse. Mandy, great to have you with us. What'd you make of the pullback today?
Thanks, Melissa. It's great to be here. So I think what's interesting, I heard you guys mention the VIX earlier in the show, and I think that's definitely something worth highlighting is that despite a very sharp sell-off that we've seen in the equity market, we really haven't gotten much of a reaction in the volatility markets, with the VIX still being relatively muted, sub 30. And the reason I would attribute it not so much to lack of or to selling of calls, but rather a lack of demand for downside puts. What's really remarkable is that we just haven't seen any panic from institutional investors on this way down. In fact, we've seen people buy protection in August on the way up. And during this recent correction, monetizing those hedges or selling downside puts, monetizing those hedges on the way down. I think that's been a big driver of why the VIX has been so muted. So what that signals to me is there really hasn't been any capitulation. People are still taking this sell-off in stride. What we've seen investors do is, clean up positioning, especially in sectors and names where they've maybe gotten a little overextended, for example, in tech. But right now, there hasn't really been any broad, panic selling that we've seen from the institutional investor community.
So that's an interesting point, Mandy, in terms of monetizing the puts at this point. Does that mean that you believe that there will be a big spike in VIX down the road?
So I do think we're going into a period of very elevated uncertainty, both with regard to, the fiscal stimulus and also obviously with the U.S. election. Now, what's interesting is that the VIX right now is low, but if you look at VIX futures, November or December, they're actually pricing a fairly big jump in volatility because of the U.S. election. That's been the number one catalyst on investors' radar, and people are across asset classes pricing in a record amount of election vol premiums. I do think a lot of that is already priced in. And the other thing that I would highlight on the election front in terms of potentially what's driving a lot of the recent weakness is that, we talk about the election, a contested election outcome, right, is now almost, I would say, the base case scenario in the volatility markets. If you look at options that are expiring in December, those options are trading with higher levels of volatility than options expiring in November. And that's very, very unusual because typically you see volatility actually fall very sharply after the election. Whereas this time around, the market is saying we're in for a period of prolonged and additional volatility, even after the election, due to the possibility that the winner may not be known or that it may be contested. So I think all of this just kind of dampens, sentiment, and no one really wants to kind of step in here. No one has the conviction to step in here and put on, trades in meaningful sizes because of this potential uncertainty due to the election.
So if VIX is priced to be higher in December, what does it look like in January? I'm just wondering what the options market is thinking in terms of how long that uncertainty plays out for.
So far, it's limited to just December.
Okay.
So, that December is the highest point of volatility on the volatility curve. And then after December, it really starts coming in. So right now, investors are thinking this is, a 1 month additional period of volatility. But of course, inauguration isn't until January. So we could see additional volatility even beyond that, but that's not priced in. So what is priced in is just additional volatility until December.
Tim, do you have a question?
Hey, Mandy. So thanks for joining us. What do you think about how banks have kind of, if they haven't led this move down, it's been concurrent with a tech pullback. And what do you see in terms of positioning by institutional players around the banking sector, which we've had plenty of good strategists on our network talking about how the performance of the banks. John Roque from Wolf talked about this, really is on some level a harbinger for where we're going to finish the year. What do you see around bank positioning? Because it's certainly been very remote price action.
Yeah, I would say, there just hasn't been a ton of interest in the financial sector. In terms of exposure amongst institutional investors, people have been taking down exposure to financial names for a very long time. And on the options market, we really haven't seen much in that sector. I think the focus in recent weeks has really been in tech. But, the question of, rotation into cyclical names, we've seen kind of rotation away from tech into financials for a brief period of time, but it hasn't really been sustained, right? And to me, for financial stocks to really rally from here, we need more fiscal support. We really do need more fiscal stimulus. That's going to spur a stronger economic recovery, and that's when you have, higher yields, and stronger performance in the financial sector. So without that, I really do see this sector struggling in the near term.
Mandy, always great to speak with you. Thank you for your time.
Thanks.
Mandy Zhu of Credit Suisse. Guy, do you think that the equity markets have priced in a contested election through December?
No, because I don't think that's at all. I think that there's clearly tail risk there. And if you get a contested election, I mean, it's not going to be your garden variety one. And I'm talking, obviously, Bush Gore. I think this one could make that one look like a walk in the park. So I don't think at all it's pricing in the potential for a contested election and what that looks like in terms of the mudslinging and the nastiness could be associated with it. So the short answer is no, I don't.
All right. Well, with the steep sell-off, we are always asking the traders whether or not they are finding things to buy, finding opportunities in the market. And Steve, you did see dips, so to speak, in certain stocks that you're willing to take a flyer on.
Right. So it was based on more or less the rotation that I still think will be evident as we really start to work through this sell-off. So it's the chemical names. So it's the Olin, the Trinseo. And then WestRock, I bought that off of that bullish FedEx headline where they said they hired 27% more seasonal workers. So for me, I'm looking for that rotation to take place. But remember, if the market sells off, these names are going to sell off too, hopefully to a lesser degree. Now, another name, Capri, name that a couple of weeks ago, popped up 35%, still up 20%. Look for the names that you feel as if the sum of the parts really get you a valuation or a stock price that's going to be advantageous in the next couple of months, not the next couple of hours.
Yeah, and Capri, for those of you who missed that show, was Steve Grasso's fast pitch one night. Karen, you had actually mentioned FedEx. Did you actually buy more FedEx?
No, I mean, I was hoping that FedEx would trade down, somewhat more closely with the market. It really didn't. I think it was maybe down $2. I'm not exactly sure where it closed. I'd like to see that puked out a little more, but this level is okay. I just felt like there could be more selling. So I own FedEx. I definitely would buy more here. I think if the market trades down, it's likely to trade down with it. But I think in a reopening or if another wave, I think FedEx will do fine in either scenario. So that's one. If I own none, I would be buying it right here.